next mental model that I want to go to, I think it's crucial. And I know you talk about it a lot. And it's called skin in the game. So my question for you is, what is that? And then on top of that, how have you personally aligned your incentives with those of natural resource companies or projects you have invested in? And what, you know, strategies have you used to ensure that management teams and insiders have personal stakes in the success of their investment?
Let's start off by saying not just managers. If I'm taking advice from somebody, that person better follow their own advice. If I'm, which I do now, if I'm entrusting some of my money to an outside manager, that manager better have most of his or her net worth in the same product that I'm investing in. The truth is, and I digress, Ben, but I'm going to digress. One of the things that I started doing 30 years ago was, rather than investing in funds, I started investing in fund management companies. I decided it was simple arithmetic. I could either be part of their fee stream, or I could enjoy their fee stream. And I decided that it was arithmetically better to receive fees than to pay them. So while, as an example, I've been an investor in several of the Sprott products, I'm the largest shareholder of Sprott. Rather than pay Sprott 35 basis points to manage an ETF for me, I would rather own Sprott and be paid a 3% dividend. That's skin in the game. I want my outcomes to be completely aligned with the manager's outcome. Now, the same goes for newsletter writers, people that are third-party purveyors of information. For a while, the largest financial newsletter publisher in the world, Agora, forbade their interviews, their editors, from owning the stocks they recommended. That coincided with me no longer subscribing to Agora products. I wanted the person who recommended a stock to me to be deeply involved in the stock. I didn't want he or she to be merely selling information to me. I wanted them to be selling information to me that they had acted on themselves, which proved to me that they thought that the information had value, separate and apart from subscription revenue. But the way you ask the question really goes around management teams and skin in the game. Skin in the game means that they participate in the upside the same way I do, and they participate in the downside the same way too. If a manager's incentive is involved around their salary or bonus, they will take steps to increase their salary and bonus. If their incentive is ownership in the business, they will take steps to increase the returns that accrue to them as owners of the business. Given that they're not paying me salaries, given that I don't have an interest in their bonus scheme, given that I don't have a royalty on their earnings as a human being, the incentive that matters to me is incentive that flows from the same type of exposure that I have. I have a lot of experience with this. I had a manager once say to me many years ago, just telling me all kinds of wonderful things about his company. And when he was telling me these wonderful things about his company, I happened to be able to look at data associated with his share ownership and his insider position. And it turned out that he believed that his company was the greatest thing since sliced bread, but he didn't own any. And I was able to say to him, sir, if this thing is so wonderful, why don't you own any? And he said, oh, well, I have a very large options position. I said, oh, are you trying to sell me some of your options? No, you're trying to make me a shareholder. If making me a shareholder is good for me, why isn't it good for you? There's a public mining company out there right now. I won't name it. There's a public mining company out there right now where the combined management salaries, general administrative expense related to salaries and stuff is about $3.5 million a year. And the combined shareholdings of the managers who enjoy those emoluments, managers and directors, is less than $1 million a year, which is to say that their annual compensation is 3.5 times their exposure to the stock. But it gets worse. This group of managers, employees and directors, have bonuses equal to 5 years of their average compensation if the company sold. Now, it's easier to sell a company from a lower cost base than from a higher cost base. So these managers, because they don't own any shares, actually have an incentive to see the share price go down. Down. How is it that my benefit is correlated to their benefit? Skin in the game means not just that they have a fair bit of stock, but that they paid a substantial amount for that stock. That if they make a mistake, it will be reflected in their family's lifestyle, the same way it'll be reflected in my family's lifestyle. I have enjoyed spectacular success over time in speculative resource activities alongside Ross Beatty. I've now done 14 companies with Ross Beatty and made money 13 times. In every case, Ross Beatty was a very large shareholder. And in almost every financing in a Ross Beatty company, Ross Beatty participated in the financing. That means he didn't just cruise on his laurels with the cheap stock. He financed at every level. And Ross Beatty didn't sell stock. Ross Beatty didn't trade his own stock. He didn't use the information that he had to my disadvantage. He sold all his stock at the end of the exercise after he'd built the company, the same way I did. That's skin in the game. The consequence of that is that he worked like a slave on those companies. And he didn't just work like a slave. He didn't just work hard. He worked smart. Similarly, I've been invested with the Lundin family through now 3 generations. 3 generations. I've invested with the Lundin family since 1975, since I was a 22-year-old. The hallmark of the Lundin companies is that the Lundins always own 20% or more, so that their efforts reflect on the family fortune. They don't trade the stocks, although sometimes they trade the options. They build the companies and they sell the companies at the very, very, very end of the exercise. I've been involved in Lundin efforts that failed. Those failures have cost me, several $100,000. But they cost the Lundins $8 or $10 million. That's skin in the game.